Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So very good morning. Today is Tuesday, the 21st of November. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, and as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so now let's get started over here. So as we know that we usually kick off with a key highlight of what happened last night in terms of markets, and in terms of if there's any key event releases, and as well as what are the next data or event to take note of, and followed by the short-term technical outlook on the various broad-based asset classes, ranging from the major stock indices, the major FX pairs, and as well as the commodities markets like gold and crude oil. So let's start off what happened last night. During the US session, and even during the whole of Asia session yesterday, the risk-on behavior continued to persist, being carried forward last week after last Tuesday, softer US CPI print. So what we could see over here is, let me share my screen for you, is a very strong rally on the S&P 500. So this is the S&P 500 heat map. That means taking into account of all the 500 component stock inside the S&P, the US major benchmark stock index. So what I could see is that the bulk of the rally came from the heavyweight mega cap stocks, the mega 7, that means the technology stocks like Microsoft, Apple, Amazon, Google, and Meta. And what's surprising over here is that the semiconductor also outperformed, with NVIDIA, the biggest market weighted cap in S&P 500, plus 2.25%. So all in all, right, what we could see over here is that the rally actually lead to across the board, we call it a positive performance seen in the US stock market. So what we could see over here is that the SPX is actually up 0.74%. The Nasdaq 100 outperformed, as explained earlier, why? Because it's being led by the mega heavy weighted technologies stocks like Microsoft, Apple, NVIDIA, up 1.19%. The Dow Jones Industrial Average positive 0.58%. The Russell 0.5%. So all in all, this rally seems to be pretty much persistent. Why? Because of the weakness in the US dollar. So now let's look at the dollar index over here. So I could see that the dollar index continued to actually tumble lower after the bearish breakdown of the key 200-day moving average. All right, so don't forget over here that 200-day moving average is a psychological long-term moving average. If price continue to persistently close below it, because yesterday it closed below it, and right now during the Asia session it has a negative follow through, that means i.e. It could actually lead to a further negative feedback loop from a multi-week perspective. That means what I could see over here is that this dollar index has already damaged its medium-term uptrend that was in place since 17th of July this year. So what we could see right now is that the price performance of the dollar index could potentially translate to, at least in first step, a multi-week decline. So with that multi-week decline in shape, potentially we may start to see a bit of persistent risk on behavior that is being exhibited in the broad-based asset classes. That means primarily driven more on the positive feedback loop on the equities, where we start to see strong performance in the major benchmark stock indices. Then definitely this weakness of the dollar has been led, or has been triggered by the slide in this 10-year US Treasury yield. Why the 10-year US Treasury yield has a strong, we call it a direct, we call it a strong, not say direct, a strong influence on the risk on behavior, because like I explained earlier, for those who join me in my daily dose of market insight, the 10-year US Treasury yield is actually a benchmark of a long-term risk-free rate. That means, i.e. cost of funding. If this 10-year US Treasury is going to actually inch much lower, it would reflect a lower or softer global cost of funding. So that actually beneficial to risk key assets like equities and especially growth and long duration risk assets. Okay, so you want to see over here is that the 10-year US Treasury are going to inch much lower for the 1, 2, 3, 4, 5, 4, about close to about 6 or 7 consecutive session. So what you could see over here is that it really start to break down right now during the Asia session. It will break down below this, I would say, medium term ascending channel support that is in place since 4th of March low. So this is pretty much significant. Why? Because from 4th of March low, this is the last relentless up move rally that actually come close to the psychological 5% and the major resistance of 5.2%. So what you could see over here is that if you start to see a breakdown of the next intermediate resistance at 4.33%, what we could see on the 10-year US Treasury yield could see further potential downside pressure to retest the long-term pivotal support, which is also confluence the 200-day moving average at 4.06/3.97%. So given that this we call it significant gap towards the long-term pivotal support over here, that means it could actually lead to much more or reinforce this ongoing dollar weakness, which eventually also will see persistence risk on behavior on the equity prices. That means, i.e., potentially positive equity prices, positive major stock benchmark prices going forward from a multi-week perspective. All right. So now, what are the key data to look out for today? So if you look at the economic calendar, it's a rather quiet calendar during the Asia session, except during the US session. For those who are looking at to trade the Canada dollar, Canada inflation rate will be up at 9:30 p.m. Singapore time later. Then followed by US 9:30 p.m. We have this existing home sales data as well for the month of October. Then followed by ECB President Lagarde speech at 12 a.m. Singapore time, and also the all-important FOMC minutes that are going to be released at 3 a.m. Singapore time later. But I think this FOMC minutes over here is pretty much outdated really, because given the fact that market are now more concerned about going forward the December FOMC meeting, where the Fed will release their latest dot plot projection, taking into account of the latest softer US CPI print out on last Tuesday, how the Fed will tend to actually tackle this situation, especially where previously in the September dot plot, they're actually looking out for one more interest rate hike before 2023 ends. That means bringing the Fed fund rates to 5.75% from 5.5% right now. So will that be still another potential rate hike before 2023 ends? So the story will actually start to unfold during the December FOMC meeting. But for now, we still got to take into account and respect the current persistent dollar weakness behavior, that which could actually have a positive feedback loop on the major stock indices. Then over at the earnings front, we have this all-important NVIDIA earnings that's going to be out later. So NVIDIA will actually release their earnings after the close of the US session today. That means in Asia time, after 5 a.m. Singapore time tomorrow, means 5 a.m. in the early Wednesday tomorrow. All right. So NVIDIA, why NVIDIA is important? Because NVIDIA is a heavy weighted component stock in the S&P 500. So for those who are trading in the S&P 500 index, as well as the Nasdaq 100, we got to pay very close attention to the price action of NVIDIA, because they do have a significant influence on the Nasdaq 100 and the S&P 500, given that they are NVIDIA is the 4th biggest weighted component stock inside S&P 500 and the Nasdaq 100. So with that, now let's kickstart with the technical outlook on the short-term technical outlook on the major asset classes I want to share with you all. So with that, let me hide myself so that you could actually focus more on the screen instead. All right. Okay, so over here, let's start with the S&P, the Nasdaq, the broad-based stock indices first. Okay, so like I said earlier, NVIDIA is pretty much important on the Nasdaq 100. Why? Because of its is the 4th biggest weighted component stock inside. Its price action has a significant influence on the price action of the Nasdaq 100. So NVIDIA. So let's look at the price action of NVIDIA over here. So the technical price action of NVIDIA ahead of the release of its earnings later on is pretty positive. So what we could see over here is that the all-time high was on 24th of August, printed at 502.62. So NVIDIA now is just an inch away from its current all-time high level. At this moment in time, there's no clear sign of bearish exhaustion or bullish exhaustion seen in the price in the price section of NVIDIA. RSI about to hit its overbought level, but there's no bearish divergence. Price action going to trade above the 20 and the 50-day moving average and continue to be rather positive, involving inside this medium-term ascending channel that is in place since January 2023 low. So all in all, right, the next resistance coming for NVIDIA based on FIBO projection will be 543, then followed by the upper limit at 575, which is the upper limit of this ascending channel. Key support holding at 468/435, which is the 50-day moving average. All right, so all in all, right, what you could see over here is that the price action of NVIDIA continue to be exhibiting positive key technical elements. That means, i.e., the odds of a bearish reversal from Nasdaq 100 is pretty much low at this juncture, given the positive price action that is being exhibited by the technical chart of NVIDIA. So now let's go to the technical chart of Nasdaq 100 in our platform. Okay, so let's start with the Nasdaq 100. So Nasdaq 100 is going to rally and almost hit our key short-term resistance level at 16,160. So we will still maintain that bullish outlook on the Nasdaq 100. Short-term bullish out. What I mean by short-term bullish outlook here will be the intraday bullish outlook. So still remain the short-term intraday bullish outlook on the Nasdaq 100, with the next resistance coming in at 16,310. So what 16,310 is the upper limit of this short-term ascending channel that is in place since 27 October low. All right, our Titan, given that the RSI is not the hourly RSI has reached a extreme overbought level, so potentially there may be a pullback first taking to shape. It means there will be a chance of a pullback before another rally going forward to 16,160, then followed by 16,310. But I don't want to tighten my key short-term pivotal support using last Friday's swing high. Now last Wednesday's swing high now turns into a pullback support at 15,915. I'll be instead using this level over here, 15,765 as my key short-term pivotal support to maintain this short-term intraday bullish outlook on the Nasdaq 100. So what's 15,765 is last Friday a minor range support level, also confluencing with the median line, the dotted line, the dotted gray line, the median line of this minor ascending channel that I draw from the low of 27th of October. However, if we start to see an hourly close and break down below 15,765, then this short-term bullish intraday outlook will be invalidated to see an extension of this minor corrective pullback towards the next support zone at 15,540/15,380. So that's for the Nasdaq 100. Dow Jones Industrial Average, US Wall Street 30, we call on platform. No change. Price action managed to burst above last Friday's swing high area. Now turns into a minor pullback support at 35,055. Still no change. I'll be using 34,790 as my key short-term pivotal support level. Still maintaining that short-term bullish outlook heading towards 35,295. Above it sees the upper limit of the ascending channel, acting as a resistance at 35,830. Also confluencing with the one-time FIBO extension that I draw over here as well. However, hourly close or breakdown and a breakdown below 34,790 will invalidate this short-term intraday bullish outlook to actually see a start of a corrective pullback towards the next support level at 34,385/34,190. After hitting this level, potentially we could start to see another round of bullish uplift resume as well, given the fact that 34,385/190 is a key support level, converging very closely with the 200-day moving average and the 20 and 50-day moving average very closely above it, and as well as this pullback support of this former ascending channel descending channel resistance that was taken out on the last Tuesday. Okay, so that's the Dow Jones Industrial Average. The German 30 yesterday kind of underperformed against the rest of the world and is continued to actually shape that pullback, but that pullback actually immediately hit right at the intermediate pullbacks support that we highlighted yesterday, which is 15,858 before it staged a minor bounce. So still no change. I don't want to tighten my key short-term pivotal support so close with yesterday's low. I'll still maintain it at 15,760. So as long as 15,760 holds, potentially the German 30 could see another potential upleg to test the next resistance at 16,050 in the first step. So still maintaining that short-term intraday bullish outlook on the German 30 index. But however, if we start to see an hourly close and a breakdown below 15,760, then we will start to see a start of a minor corrective pullback to retest this 200-day moving average, I think as a support level, which confluence with the next intermediate support zone at 15,620/15,560. So now moving on, next will be Asia, will be the Hong Kong 33 index or the Hang Seng index. So the Hang Seng index going to pierce higher and clear above the intermediate resistance at 17,800 we highlighted earlier on. So I'll be using a much more tightened key short-term pivotal support for today, which is 17,700, which is confluence closely with the 50-day moving average as well. So as long as 17,700 pivotal support holds, still maintaining that short-term bullish intraday outlook on the Hong Kong 33, looking to retest the minor range resistance level that is in place since September 15 September high, I think as a resistance at 18,350. But however, if we start to see a hourly close and a breakdown below 17,700, then we will start to see another round of messy, choppy downward movement to retest this minor ascending trend line support level, now acting as a support at 17,300. So this minor ascending trend line is being drawn from the low of 24th of October that was being held previously on the sell down on 1st of November and 13th of November, now acting as a support at 17,300. Okay, so that's for the indices. Now moving on, next will be the FX market. So over here, the FX market, the dollar continued to weaken. So what we could see is that the euro dollar going to inch higher, heading towards our key resistance that we highlighted yesterday at 1.099. So still maintaining that short-term bullish outlook on the euro dollar with a tightened key short-term pivotal support now at 1.088 level. So as long as RSI is now coming towards the overbought level, so potentially you may see a bit of pullback slightly above the 1.008 short-term pivotal support. So as long as this 1.088 short-term pivotal support holds, potentially the euro dollar could see further potential upside. 1.099, that will be the resistance. Above it, take us up higher to 1.1040. So what's 1.1040 is in fact the range resistance of this congestion level over here from 26th of July to 14th of or 10th of August as shown on the hourly chart. However, if we start to see an hourly close or breakdown below 1.088, then we could see a start of a much more extension of the minor corrective pullback heading towards the 200-day moving average, now acting as a support level at 1.0825. All right, so now still maintaining that short-term intraday bullish outlook on the euro dollar with a tightened key short-term pivotal support at 1.088 for today. So no change similarly for the British pound, the sterling dollar, the sterling against the dollar. So the sterling dollar continue to actually strengthen and break above the intermediate resistance at 125.10. So this 125.10 will be around my pullback level, my pullback support level. Still using that 1.24440 key short-term pivotal support level as my short-term pivotal support to maintain this short-term bullish outlook on the sterling dollar, heading towards the next resistance at 124.40, followed by 126.80 next. But however, if we start to see an hourly close below 124.40, then we may start to see an extension of this minor corrective pullback, heading towards the next support level at 123.75, which was last Friday minor swing low area. Okay, so still maintaining that short-term intraday bullish outlook on the euro dollar using 124.40 as a key short-term pivotal support. Now, other major currency pair will be the Aussie dollar. Still recall the Aussie dollar yesterday, we do have a bullish outlook on the Australia dollar. So the Australia dollar is now approaching our short-term, we call it intraday target or resistance at 65.95. Why this level is important? Because it confluences with significant graphical and mathematical technical elements. Key technical elements graphically will be the minor range resistance level from here, 4th of August and 10th of August, and also the minor ascending channel that I draw from the low of 26th of October, its upper boundary, and as well as the 200-day moving average. And with the RSI now coming towards the overbought level, potentially we may see a bit of sideways congestion heading today in the during today intraday session. So for today, I'll stress again, for today, I will maintain a neutral outlook But in my longer term perspective, from a multi-week perspective, the technical outlook still pointing towards a much more bullish element, a bullish outlook on the Aussie dollar. But it's only for today, given the fact that the hourly RSI is almost hitting the overbought level, and also price action coming close to a key technical level at 65.95. Potentially, you could see a bit of sideways consolidation first for today intraday. So I'll turn neutral for today at 65.95, 65.20. If we start to see an hourly close below 65.20, then we may start to see a start of a minor pullback towards the next support level at 64.40. Then for sure, if we start to see during the European session or the US, and you start to see a bullish breakout above 65.95, then we may start to see a continuation of this impulsive up move towards the next resistance level at 66.50/66.75. So this level is actually confluence with this pullback area here, this former minor, we call it medium term, previously medium term trend line support level. Trend line support level broken down on the 10th of August and now turns into a pullback resistance as well at 66.75, 66.50. All right, so splitting to a neutrality stance for today on the Aussie dollar between 65.95 and 65.20. Now, the dollar yen continues to actually inch much lower, hit our support level at 148.35 level that we highlighted yesterday. So given the fact that it's right now coming very close to the oversold level, and we start to see a bit of bearish exhaustion where price action on the RSI has started to shape a higher low, okay, indicating to us there might be a chance of a potential counter trend rebound taking shape. So I'll be using 147.45 as my key short-term pivotal support level, looking for a potential counter trend rebound, intraday counter trend rebound within this short-term downtrend that is still in place for the dollar yen. So looking forward towards this first level of resistance level to watch out for will be at 148.20. A break above 148.20 potentially takes us up towards the next resistance level at 149.20/50. Graphically, this former minor swing low area turns into a pullback resistance, as well as the 50-day moving average. So like I repeat again, because the price level of the dollar yen is now approaching a key support level over here, key short-term support level, 21st of September to 3rd of October swing low area. And right now, if we were to draw also minor descending channel, okay, it's approaching the median line as well. Okay, so at this point in time, I'll be using 147.45 as my key short-term pivotal support level. As long as this level maintain to hold, potentially there could be a minor counter trend rebound coming into shape for the dollar yen, heading towards 148.20, above it 149.20/50. Around this level, thereafter we could start to see another leg of bearish impulsive down move resumes for the dollar yen. However, if we start to see an hourly close below 147.45, then this we call it impulsive down move leg, this steep down move leg will continue its waterfall slide towards the next support level at 146.60/20 on the dollar yen. Okay, so graphically is this congestion zone over here. All right, for the dollar yen. Okay, now that's covered for the FX market. So now let's go on to the commodities market. Let's start with gold first. So gold price, no change for gold. So for gold over here, we see the price action actually reacted off positively at the 1972 key short-term pivotal support that we highlighted yesterday. So still maintaining that short-term bullish outlook, heading towards the next resistance at 2006. A break above this level potentially take us up higher to 2028/2037 level on the gold, the XAU/USD, which is the spot gold. All right, intraday outlook. Okay, so still maintaining that short-term bullish outlook on gold, except that with the fact that if we start to see a breakdown below 1972, then we could start to see a start of a kind of a messy corrective pullback to, at least in first step, retest last Wednesday and last Tuesday minor swing low area at 19,057. A break below this level could retest the all-important 200-day moving average again at 1932 level, where price action on last Monday shaped that bullish reversal. All right, so still maintaining that short-term intraday bullish outlook on gold. So now, what's next for WTI crude? So WTI crude, still recall yesterday we flipped to a bullish outlook. Why? Because on the daily chart, it starts to show rather positive elements. Like highlight again, last Friday's strong rebound from here, 72.40, close to 67% FIBO retracement of that previous medium-term up move from the low of 8th of May all the way up to 27th of September swing high. And also the RSI bouncing off very closely from the oversold region as well. And yesterday price action attempt to actually hit the 200-day moving average before it consolidated again. So this level is pretty much key, the 200-day moving average. So the 200-day moving average for sure is the 78.10 level where price action hit and consolidate. So for today, given that the RSI, there's no clear signs of a bearish divergence on the RSI, price action will continue to shape higher high. Okay, in line with the price action on the WTI crude. So for WTI crude oil price, which is the West Texas oil in our platform, so we were still maintaining that bullish outlook on the short-term bullish outlook on WTI crude, but except the fact that it may dip, it may see a bit of pullback towards this level over here. Okay, 76.55. So I don't use this level so tight as my key short-term pivotal support level for today. So I will tighten it to 74.90. So what 74.90? If we do the FIBO retracement from yesterday's Friday low to all the way up to yesterday high, it's close to 71.8% FIBO retracement, and as well as the meeting line of these two strong bullish hourly candlestick that I show over here. It's at 74.90 as well. So 74.90 will be my key short-term pivotal support level to hold any potential pullback, given the fact that the RSI now has to exit from the overbought level, haven't hit the oversold zone yet. So we could start to see a pullback materializing at 76.55. A break below should go around slightly above the 74.90 level. So as long as 74.90 key short-term pivotal support holds for any pullback, potentially we could see another round of bullish upleg towards the next resistance at 81.05 after taking out 78.10, which is the 200-day moving average. But however, if we start seeing an hourly close below 74.90, then this corrective pullback may extend to test the key medium-term support zone level at 72.70/72.40. Okay, so still maintaining that short-term bullish intraday outlook on West Texas oil. Okay, so with that, we come close to the 30-minute mark. So that is the key, we call it market insights that I will share with you all for today. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.